So I'm in the house just enjoying myself, watching 4 college football games at once due to Fubo TV, and I'm just having a grand old time relaxing for once on a Saturday night. And a friend has to send me something so stupid that now I'm out here recording a video in my garage. And I'm so frustrated by this whole situation that I got to share my opinion on this because it's so dumb, okay? Look at this. Meta. If you bought Meta stock on opening IPO day back in 2012 and held all the way up till today, you'd be up a whopping 100%. If you did the same with other generals, you would be up this much on Microsoft, this much on Amazon, this much on Apple, this much on Tesla, and this much on Google. First off, that's inaccurate. You'd actually be up a lot more than that on Meta. They apparently don't even know what Meta went IPO at, but good for them, okay? So right off the bat. Meta's in a massive hate cycle right now in the stock market, right? And why is this? Well, the stock's gone down massively, right? It's down 70.7% this year. This year. An absolutely insane move. They're spending heavily on the metaverse. No one even understands the metaverse right now or what that big opportunity is. They don't get it. And so the stock's in a massive hate cycle. It's gotten so bad that this market cap for the entire company, remember, this is Facebook, this is Instagram, this is WhatsApp. The 3 most important apps in the world, okay? And the metaverse opportunity and the company that's leading the metaverse by a mile. The entire company has fallen to $266 billion market cap now, which is lower than Home Depot, who sells hammers and mulch, okay? That is how bad it has gotten for this stock right now. And so you're seeing a massive hate cycle around this stock. And so let's break this down stock by stock, and I'm just going to absolutely destroy this whole just stupid mentality that's out there right now. It's absolutely, utterly ridiculous, okay? So let's break it down. Let's start out with Microsoft stock. So Microsoft went IPO, obviously, way back in the 80s. And stock did amazing. If you bought this way back in the 80s, good for you. You did absolutely tremendous, right? It has been a winner chicken dinner in a massive, massive way. Well, did you know that Microsoft hit a market cap of $600 billion when everybody was buying the tech stocks like crazy in 99, 2000. And it took 17 years for the stock to get back to its previous value. Okay. So you look at Microsoft today and it's like, wow, what a great stock. The stock took 17 years to get back to where it was in the tech bubble, right? And so you can always cherry pick this data and you can make a company look enormously bad, to be quite honest, right? And much of Microsoft's gains came back, obviously, in the 80s and 90s when, that was the whole big wave and everybody was starting to get PCs. And obviously Microsoft benefited more than pretty much just about anybody from that whole wave, right? 17 years. Amazon stock. So we all know Amazon is this tremendous company that's now a beast, and they million Amazon trucks going around your neighborhood every single day, right? Amazon Web Services grew to be this giant over the past decade, and it's a phenomenal company. And they also bought companies like Twitch and Whole Foods over the years, and they own so many different businesses now. It's ridiculous at this point in time, okay? And so Amazon, if you bought the stock way back at IPO day, you have done amazing, absolutely amazing on the stock. It's been one of the most tremendous gainers, right? But what if I told you Amazon stock fell more than 90% in the tech bubble, okay? More than 90% from where the stock was at the end of 99 going into 2000 to where it troughed at in like September of 2001. The stock fell over 90%, okay? And there's been countless times where people question up and down Jeff Bezos and his spending on infrastructure and why you guys spending so much, right? And let's plow all the money back into the business and plow it all back. And some investors agreed with that mentality, right? And they thought, okay, yeah, spend the money back on the business and let's get a massive ROI from this. Other people looked at that as you were wasting money. You are spending so much on this business to build out this and to build out that. What you should be doing is giving some money back to shareholders and focusing on profitability, right? And so who was ended up being right? Obviously, Bezos was right, and the long-term investors were right in that situation. They weren't just right, they were right in an absolutely epically massive way. But Amazon's been an incredibly volatile stock in its history, including that was the most volatile of all those times, falling over 90%. I mean, we look at Meta's drop of 70.7% this year is absolutely insane. This is a whole different level when you're talking about 90%. That's basically you were gone and forgotten. That's basically people thought you were going to be nothing. That's basically exactly what happened there, right? And I reacted to this interview probably on my reaction channel at some point in time, maybe a month ago or so. I thought it was a great video to react to. This was Jeff Bezos in 1999. It was an old interview that was done essentially on his plans, and this was before the dot-com crash. And Bezos was being questioned up and down from this interviewer about, well, what gives you the audacity that you think you can be successful at building out warehouses? And he looked at like the warehouse business as different from like what they're selling products online. And all these questions he had to answer in this interview, it was just kind of like ridiculous. And like they didn't get the vision. They never understood it. They never understood why you're spending so much on this, why you're doing this, why you're doing that. They never understood all the pieces of the puzzle he was putting together. And he was trying his best to explain it to these folks, but they just didn't get it, right? And that's why that stock fell 90%. If people got it, Amazon stock never would have went down 90%. You could have made it obviously an argument that it was overvalued, so it needed to come down, right? But over 90%, did it need to come down that much? Absolutely not. That's clear, like they didn't see the vision. When you see stocks fall in 60, 70, 80, 90%, it's no longer on valuation. That's people didn't understand what's going on for the future, okay? When you see a stock go down 10, 20, 30%, that's what I call a correction in a stock, and that could be for valuation reasons. When you see 70, 80, 90% drops, that's people are completely discounting the entire business. They don't believe in anything you're doing. They don't understand anything you're doing, and so you're gone and forgotten stock. They want no piece of you. That's the bottom line with Amazon, and obviously Bezos had to go through that for years and years and years. Obviously Bezos is now not the CEO of Amazon anymore at this point in time, right? But no one second guesses Bezos. Like if he could do this, he could do anything now at this point in time. He could start up a whole new company and people would be dying to give their money to him because obviously he proved out everything that he said he was going to do, right? Apple. If you bought Apple way back when they went IPO back in the early 80s, you would have made a tremendous amount of money. We all know this, right? Apple's done an absolutely amazing job over the past 40 plus years of building an epically huge company. But did you know Apple would have went bankrupt if it were not for Microsoft saving that baby way back in 97? Now, in that situation, Microsoft was not just being a good guy and trying to save Apple and buddy in that situation. And if I recall, Microsoft it was either 5% or 10% of Apple's entire company, which by the way, they should have just held that because now that stake would be worth probably $100 to $300 billion, depending upon how much they had there, if not more than that. So they should have held on to that. But anyways, okay, nonetheless, they saved it. And the reason Microsoft actually did save that, at least in my opinion, it was never proved to this. My opinion on this is the reason they saved it is because there was a lot of questions at that time, at that moment, that Microsoft had monopoly market share. The government was trying to crack down on them. And so by saving Apple, you're saving another operating system. And it was kind of like an olive branch to look at, it's more competitive out there. Not just everybody has Microsoft. But if you remember back then, guys, in the late 90s, Microsoft dominated everything. There was no such thing as, using any other, internet browsers or anything other than Microsoft. Like as somebody that was in the school system back then, I learned everything on Microsoft computers. That's what it was back then. And so they had completely dominated the software space at that given moment. And they needed somebody else to be competition, which Apple was never competition for them back in those days. But they saved it, and obviously it was for a branding reason. But nonetheless, if Microsoft didn't do that, Apple was likely going to go bankrupt. They were within 90 days of bankruptcy. Apple, the giant we see today, that's a $2.5 trillion market cap, the unstoppable perfection that is Apple. That company was 90 days away from bankruptcy, right? Then Steve Jobs launched his iPhone, right? And you had a lot of people that said, oh, this is great. This is the future. This is huge. And you got other people that just weren't on that wave, right? And it's like, why do we need this? This is so silly, right? You remember the Steve Ballmer video laughing at iPhone? $500 for a phone? You gotta be kidding me. And there's obviously a lot of folks that just didn't see it. They didn't see the vision there. They didn't understand how big that product was going to be and that it was going to revolutionize the way business was done, the way the world was run. And that's what ended up happening, right? That's what ended up playing out there. But not everybody got it. And so not everybody gets it when there's some huge next technology change that's going on and they never understand like how big this thing is and how big it's changing, right? If people would have got it, Amazon stock would have fell 90%. If everybody understood how big the iPhone was going to be, like Apple stock would have ran up way higher than it ran up way prior to that, right? If everybody understood it. And that's going to be the situation that's said for all these different companies, but a lot of times you just don't understand how big this is really going to be, right? And so that was definitely a situation with iPhone where some folks they didn't understand it. They thought it was just going to be some niche product that was going to be for, I don't know, just people with too much money or something like that, right? And it ended up being the biggest game changer we've seen in the past 15 years in the economy, right? And when it comes to iPhone, there's some important things to remember. It didn't take off like crazy into mass scale right away. It took like 7 years to really start to hit critical mass where you're like, wow, they're starting to do big numbers at this point in time. It was not overnight. And so with Meta working on the metaverse, which in my opinion is the next biggest opportunity and actually a bigger opportunity than the smartphone was, when it comes to something like that, you got to remember this is going to take years to reach critical mass. You're talking, 7, 8 years from now, you'll start to see Meta, being like in a place where they're putting up huge numbers in regards to their products. And it's just going to be a scale that builds over time. Meanwhile, there's been several times in Apple's history that they had to answer a ton of questions about growth being done with the iPhone. 2013 to 2014 was definitely at that time. Samsung was a major competitive threat to Apple during that wave. And I remember Samsung had much bigger phones than Apple did at that time. And a lot of people were starting to buy Samsung phones, right? And then all of a sudden, Apple ended up coming out with, oh gosh, what iPhone was that? I think it was iPhone 6. Was the first bigger iPhone. And next thing you know, 2015 sales absolutely went insane, right? But a lot of people thought iPhone sales might be done at that point in time, and it was topping. Then once again, in 2016 and 2017, you had another exact same situation where people thought iPhone probably topped, right? And then 2018 was a huge growth cycle for them. Then you had 2019 to 2020, where people thought, okay, maybe Apple's reached its peak with iPhone. Now you had a huge year in 2021, huge year in 2022. I would bet, I'm not going to bet money on it, but I'm very confident that in 2023, iPhone sales will be down. And it's just a question of how much they'll be down, in my opinion. And once again, there'll be a thought process out there, and we'll see if that is finally the time it happens. But there will be a thought process that builds in 2023, in my opinion, that iPhone sales are done. And they already reached the best it'll ever get, and it'll just start going down from there, okay? And so they've had to answer those questions many a times, and Apple stock has fallen countless times during that. I mean, the amount of times Apple stock's fallen 50+% is ridiculous throughout its history. And don't forget, they almost went bankrupt, okay? Tesla, my Tesla. All right. Tesla, my Tesla. Obviously, if you bought this one on IPO, you've made crazy money. Even somebody like myself, is fortunate to have made game-changing money in Tesla stock, and some of you guys might have as well. But I can tell you, this is a different level of game-changing money if you bought this stock way back at IPO day. I was buying this stock in 2018, 2019. So I got incredible gains, but it's nothing compared to the gains I could have got if I was buying this baby back at IPO. But believe me, Tesla was a much bigger risk back then, I can tell you that, right? People forget that Tesla stock did nothing for over 5 years. Over 5 years, Tesla stock did nothing. From 2014 all the way through, halfway through 2019, that stock went nowhere for 5+ years, almost 6 years. Okay. Tesla continued to make amazing progress on their cars, their technology, their brand, everything, marketing, everything. As far as Tesla went, they did a phenomenal job, but the stock went nowhere for almost 6 years. Okay. So when it comes to a company like Meta, you can look at that stock and you say, this stock hasn't gone anywhere in years. Like the stock's all the way back right now. As of today, recording this, the stock's all the way back to pricing that stock was in 2016. 2016? Come on, man. Companies can make great progress and their stock prices can go nowhere for a given period of time for many different reasons, right? For Tesla, it was the fact that they were a huge money loser and there was bankruptcy fears and all those sorts of things, right? For Meta, it's, oh my gosh, they're spending so much money on the metaverse and this is crazy and growth rates aren't coming in as strong as people would like, things like that, right? And so Meta's got its own different set of problems, but at the end of the day, it adds up to the same thing. It ends up adding up to a stock that went up and down and all around, but really didn't go anywhere for 6 years. And that's exactly the same thing we see playing out in Meta right now, okay? And people forget that. People either aren't experienced enough because they haven't been in the market long enough to know these things, or they just conveniently forget them. And it's like, did you forget Tesla went nowhere for years and years and years and years, right? And you had countless people predicting that Tesla stock was going to go to $0. You had countless people saying it was going to go to $5. Countless people saying it was going to go to $0, right? The company was going to... Now, this is a whole different situation than obviously Meta has to deal with, because you're just very ignorant if you're saying Meta's going to $0, right? Because it's still a massive profit machine. Even in down times, Meta's a massive profit machine, cash flow machine. So Meta's got a way less serious situation going on than obviously Apple had to deal with in the late 90s, and then with obviously Tesla had to deal with. Because for Tesla and Apple, it was real, like, we think they might go under. And that's how a lot of analysts thought of it. We think this company's going to be nothing. They're going to go out of business. Their stock's going to go down and never come back and things like that, right? And obviously that's not the way it played out, as we saw throughout history, right? But that was the belief. And those were very, very significant, serious situations, right? If we want to cherry pick data, which is what this person's doing, right? We can cherry pick data. Did you know Google stock was down from 2007 to 2012? It was down 17% from 2007 to 2012. Isn't that incredible? Think about all the growth that Google had over that time. Think about all the growth that YouTube had over that time. Think about all the growth Android had over that time. Think about all the growth that Google Cloud had over that time. And yet, think about all the revenue they made over those years. All the profits they made over those years. How incredible the margins were. The team they built out. The employee force they built out. And the stock went down from 2007 to 2012. Isn't that extraordinary? Isn't that extraordinary, right? So we can always cherry pick this data and make a company look really bad, because there's going to be 5, 6, sometimes 7-year time frames where a company goes down despite them making progress. And with Meta, right? That's a company that they've added massive amounts of users over the past 6 years. They've added massive amounts of revenue. Their revenues today make revenues of 6 years ago look like a joke. Their net income today makes the net income of 6 years ago look like a joke, right? Their opportunities today are massively bigger than they were 6 years ago, but yet the stock price hasn't gone anywhere in 6 years, right? And so you got to understand, companies go through these periods, and it honestly doesn't make sense a lot of times, but it is what it is. And if you want to cherry pick the data, you can, right? If we want to take a peek, right? To be honest, Wall Street's never gotten this stock. They've never gotten it. Since this company went IPO, right, the stock fell 50+%. Right after the IPO, 4 months, 5 months after the IPO, it was already down 50%. In a time frame that actually was decent to go public in 2012. We were already well out of the great financial crisis at that time. Things were on the up and up for the markets in general. It was a good time to go IPO, actually, but no one wanted a piece of that. They didn't understand it. They're like, how are they going to make money from this social media stuff? I don't quite get it. They were talking about maybe this is the next MySpace, which obviously that never came to fruition, and they just grew bigger and bigger and bigger and bigger over the years, right? And still are growing to this day. Every time you think they got to be done growing, they're still growing users to this day, which is just extraordinary. And they never understood it. The only time they started to understand it was when the money started hitting. When the revenue started coming and the net income started coming, and the margins start coming, then they magically got it. Then they're like, oh, I get it now. I get it now. No, you don't get it. They still don't understand how social media works. None of those fund managers, they don't even know what the heck Instagram is, or what an Instagram reel is, or how big of a deal that is, and how massive that is that's taken off. They don't get the whole thing. They only get the numbers. That's all they get. And so when Meta can't show the numbers right now, and they show net income going down, they show revenue not being in a great place, and they show that they're spending massively on a metaverse opportunity, these people don't even understand Instagram. How are they going to understand metaverse? They stand no chance. They don't get it. That's why the stock's under $100. If they understood metaverse and they understood that this company's leading, this would be a $500+ stock today. They don't get it at all. Okay. They don't get it at all in this situation, right? And so Meta's been doubted many, many times throughout time, right? And obviously they bought Instagram way back, many years ago for $1 billion. Gary Vaynerchuk, he actually made the prediction that basically Facebook was going to buy Instagram, and congrats to him. That was an amazing prediction. And then he said that Facebook was stealing Instagram for $1 billion, which was a ridiculous comment to make at that time, because most people were like, this is some new app? How are these apps even going to make money? And they're buying it for Instagram, if it was by itself, would be $100 billion, if not multi-$100 billion asset today. But sometimes they don't get it, right? And some people do get it, and sometimes it's the very few that actually do get it. Hope you guys enjoyed today's video. I'm getting back to chilling out here, man. I just had to record this. I was mad. Send me a DM on Instagram. Cheer me up. Much love as always, guys, and have a great day. Have a vision.